So, Steve, I know that you're not in and out of the market on a day-to-day basis. You have your money out for a longer period of time. It does affect your day-to-day performance. But does what's going on right now with Chair Yellen and central banks generally and interest rates affect how you're allocating your resources more gradually?
Yeah, we do. We do make decisions at the margin to either lean in or lean out. We're not day traders. We don't swing wildly, but we lean in and we lean out. And we have been leaning out for some while now because we do think valuations are very stretched. When you look at valuations by an historic measure, we're somewhere up in the upper decile of valuations, and that generally does not augur well for future stock price appreciation.
So central banks, not just the Fed, but central banks, the major central banks, have been supporting asset values with very inexpensive money, if I can put it that way, accommodative policies. Do you expect that to continue for the long term? Are we essentially lower for longer?
Well, I put it slightly differently. I think what's happening is a search for yield, that as investors perceive that fixed income yields driven by the Fed are going to be lower for longer, then they go look for yield. And so if you look, for example, at some of the stocks that have done well in the last, since Mrs. Yellen's testimony, it's been these yield-oriented stocks that people go to when they think the Fed is going to be more dovish. So it's really driven by that phenomenon. And at the moment, it does appear that the rate of interest that's required to keep economies moving and to keep inflation moving toward her 2% target are lower than what we used to think they were. And therefore, we do appear to be in a lower for longer environment.
Steve, we've had a synchronized pivot from a lot of central banks in the last month. Some people think it might be coordinated. Whether it is or whether it isn't, has it influenced your thinking about your portfolios at the moment?
I have no reason to think it's coordinated. I think each of these central banks, they talk a lot to each other, but I think they make their own decisions about their own economy, and they are facing the same set of issues across the developed world. And as I said, it's a little bit like a sugar high in a way. The market is high and earnings have been good, but most of what, or a lot of what's driving it up are these central bank activities, and that makes us nervous, and therefore we've been very conservative.